A special order business assumes that you have excess capacity to do business and have production, and that you can charge a sale price that is below your normal sales price because you're not incurring all the costs. And one way to think about special orders is Nvidia. It's one of the most valuable companies in the world. Revenue is going through the roof, and the reason is that there's so much demand for the chips that they produce for AI. Well, at some point, analysts wonder, what if it slows down? What if demand slows down? They may have excess capacity. Let's take a simpler example and assume that you're selling women's dresses. It's toward the end of the month, and you've got a few days where you've got some excess capacity. You've got machinery available to make more dresses. The other thing about special orders is, because it's the last few days of the month, you have already incurred all of your fixed costs, or almost all of them. So you've already paid the lease in the building. You've already paid the repair contract on machines in your factory. All kinds of fixed costs have already been paid. The importance of that is that those fixed costs are irrelevant when you make a decision about taking on a special order. So let's assume you normally sell the dresses at 100, and somebody approaches you and says, I've gone to some competitors and I'm wondering if you're willing to make these dresses in the last few days of the month for $80. Well, you got to figure out your costs. Your costs in this case are the variable cost, direct materials and direct labor, to make the special order of dresses, plus any extra fixed costs you'd incur just for this special order. But because you've already incurred all your fixed costs, it may be financially possible for you to only charge $80 for the dress rather than $100 because your fixed costs are already covered. This is an important consideration for managers who are getting near the end of the month. You don't want to forget about the fact that you can take in a special order, and in many cases it can be profitable because you've already paid for your fixed costs and you've got excess capacity to make a product.